Nvidia will report its next quarterly figures on November 20th, but we already have quite a lot of information to work with, especially from companies like Microsoft, Meta, AMD, Tesla, and some other companies as well with regards to AI demand, investments in AI, etc., etc. So we can already see what these companies, what the clients of Nvidia are telling us, especially as we go into 2025. Now, right now, Nvidia, I mean, we know Nvidia is one of the best performing stocks, right? Best performing companies as well. It's up 181% year to date, still growing extremely fast, super profitable free cash flow machine now. Yes, maybe you might say 41 times forward PE is a bit expensive right now, but I mean, if you look at the growth expectations, it's still expected to grow quite fast. But of course, there will come a point where growth is not 100% year over year. It's not 50% year over year anymore. It's going to be closer to that 20% or so. And when that happens, yeah, maybe then the PE should be coming down. But then again, the stock is up quite significantly in the last 5 years. And if you look at the forward PE, EV to EBITDA, price to free cash flow compared to the 5-year mean, we're still a little bit lower than that. How does that happen? Well, it happens because the company itself has grown so much, it has become so profitable that the stock was always going to play catch up. I mean, even if we look at price earnings to growth, 1.16 PEG ratio is not expensive at all. Of course, this is based on the current growth expectations. Now, let's dive a little bit deeper, shall we? If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and hit the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. I first want to start off with the usual meme here, because I think it's still relevant. So the state of the LLM models, you've got a pretty close race, right? Everybody's saying, oh, we're the leader, we're the best one. But to be honest, they're all probably at the same level or pretty close one to each other. And then you have the state of the GPU market. Clearly, Usain Bolt here is Nvidia, and then you've got the rest behind him. All right, so first up, I want to start with the positive news, the positive comments here. So we've got Nvidia Spectrum X makes colossal Nvidia Hopper 100,000 GPU system possible. This is between Nvidia and XAI. XAI is also expected to grow quite quickly. Elon Musk recently tweeted out that he expects his cluster to become a 200,000 H100, H200 training cluster in a single building. Now remember, back in June, he said the following: given the pace of technology improvement, it's not worth sinking 1 gigawatt of power into H100s. The XAI 100,000 H100 liquid-cooled training cluster will be online in a few months. Of course, it's already online right now. Next big step will probably be around 300,000 B200s with CX8 networking next summer. So yeah, pretty big deal. And just so you know, Colossal is expected to double to a combined 200,000 Nvidia Hopper GPUs. Now, the supporting facility and state-of-the-art supercomputer was built by XAI and Nvidia in just 122 days instead of the typical time frame for systems of this size that can take many months to years. It took 19 days from the time the first rack rolled onto the floor until training began. That's insane. And remember, here we're talking still about training. Moving on to AMD's more recent earnings call. So one analyst here was asking the following. So Lisa, for the first one, how do you address the investor argument that MI is off to a great start, but spec-wise remains kind of 1 year behind the industry leader, which is Nvidia? You're shipping something comparable to the Hopper while they are starting to ship Blackwell next year. When you are at MI 350, they will be on Blackwell Ultra or Rubin. How do you see AMD closing that gap? And can you really gain share until that gap is closed? To which Lisa Su said, yes, Vivek, I actually don't see that. So maybe let me state it another way. I think MI 300, when we launched it, was behind H100. H100 was in the market for much longer time. And we have, with our accelerated roadmap, actually closed a good part of that gap. I think MI 325 is a great product. It's going to compete very well with H200 and the MI350 series will compete very well with Blackwell. In the overarching view of the world, frankly, the market continues to be constrained, particularly in the newer product generations. It takes a long time to go from, let's call it, shipping your first samples to actually ramping in volume production workloads. And I think one of the advantages that we have with the portfolio is that from a data center retrofit standpoint, it's actually a much easier ramp, just the infrastructure is the same. Now, okay, this is good for AMD, or at least those comments from Lisa Su should be good for AMD. But then on the flip side, the market was probably expecting a little bit more from AMD's guidance. So yeah, okay, maybe they think they have a competing product with Blackwell, but that remains to be seen. And usually when you say those types of things, that should be resulted in an increase or accelerated revenue growth. A more positive comment here for the overall market is the following. In the data center alone, we expect the AI accelerator total addressable market will grow at more than 60% annually to $500 billion in 2028. To put that into context, this is roughly equivalent to annual sales of the entire semiconductor industry in 2023. Beyond the data center, we are adding leadership AI capabilities across our product portfolio and partnering deeply with a broad ecosystem of partners to deliver differentiated AI solutions at scale. Now, we know that today, Nvidia is the market leader by a long shot, right? So $500 billion in 2028. How much of that will just go to Nvidia? Probably a lot, right? Last thing here with regards to AMD, this was basically the recap for the quarter. So data center revenue increased 122% year over year to $3.5 billion. They also now expect data center GPU revenue to exceed $5 billion in 2024. That's up from $4.5 billion that they guided in July, and their expectation of $2 billion when they started this year. MI300 is like very, very well optimized for inference given the memory capacity and memory bandwidth capabilities. Here, not talking about training anymore, we're talking about inference. And in my opinion, inference is going to be much, much bigger than training. Right now, all the money is going into training models, right? But then at some point, you will have to make that switch. Moving on to Alphabet Google, they said the following. We're also doing important work inside our data centers to drive efficiencies while making significant hardware and model improvements. For example, we shared that since we began testing AI overviews, we have lowered machine cost queries significantly. In 18 months, we reduced costs by more than 90% for these queries through hardware, engineering, and technical breakthroughs, while doubling the size of our custom Gemini model. And of course, we use and offer our customers a range of AI accelerator options, including multiple classes of Nvidia GPUs and our own custom-built TPUs. They then also said that they have a wonderful partnership with Nvidia. They're excited for the GB200s, and they'll become one of the first to provide it at scale. So again, confirming that another big tech company is a big client for Nvidia and still expect to spend a considerable amount with Nvidia. Moving on to Meta. So Meta said the following. We are now working with the public sector to adopt Llama across the US government. The Llama 3 models have been something of an inflection point in the industry, but I'm even more excited about Llama 4, which is now well into its development. We are training the Llama 4 models on a cluster that is bigger than 100,000 H100s or bigger than anything that I've seen reported for what others are doing. I expect that the smaller Llama 4 models will be ready first, and they'll be ready, we expect, sometime early next year. He also said, I think a quarter or two ago, the amount of computing needed to train Llama 4 will be almost 10 times more than what we used to train Llama 3, and think will be the most advanced model in the industry next year. Meta also said that they continue to expect significant capital expenditure growth in 2025. So here again, no signs of things slowing down. Now, with regards to Alphabet, they did say that, CapEx will increase in 2025, but maybe not as fast as the growth 2023-2024. But okay, what did we expect? Unlimited growth in CapEx? Probably not. Then as for Microsoft, so an analyst asked here the following. The question every investor obviously asks is a question on the CapEx growth and the CapEx spent. Obviously, half of that facility is an equivalent that have a longer life, but the other half is the rest of the components. Can you give any color on how you think of that growth? Does it return to the traditional approach where basically CapEx is going to grow in line or slightly lower than cloud revenue? And if so, any sense of the timing? Do we have enough facilities online by sometime next year, etc.? Any color would be appreciated. And so they said the following. I think in some ways it's helpful to go back to the cloud transition that we worked on over a decade ago. I think in the early stages and what you did see and you'll see us do in the same time as you have to build to meet demand, unlike the cloud transition, we are doing it on a global basis in parallel as opposed to sequential, given the nature of the demand. And then as long as we continue to see that demand grow, you're right, the growth in CapEx will slow and the revenue growth will increase. So here it's a bit different, right? Here they're like, okay, growth in CapEx will slow down eventually, but we're going to see revenue growth increase. So we're now entering a stage, let's say, where companies are not telling us, look, next year, or at least not all companies are telling us, look, next year it's going to be even more, and then more, and then more, and more, and more. Now we are seeing some, not all, some companies, let's say, lowering expectations. Now, they did also say that AI business is on track to surpass $10 billion of annual revenue rate in Q2. Overall, if you look at Google, Microsoft, and Meta, CapEx spending for the last couple of years, you can see that all of them have increased, right, in the last couple of quarters, last couple of years as well. I added here on the side, Meta for Q3, 9.2 billion. Microsoft, I think that was 14.9 billion, if I read correctly. So yeah, they're all spending way more. Eventually, like we've seen in the past, they spend more and then it went back a little bit. Eventually, you would expect it to be a little bit of the same, right? Same with Tesla. They're now expected to spend, over $11 billion or so for this year. Next year, close to that number as well. And then it's expected to come back a little bit. Now, it's not all AI GPU related. No, it's building out factories as well. So yeah, eventually, that demand curve will start to plateau a little bit. Remember, these are the biggest clients for Nvidia. That does not mean that there is no demand anymore. No, you still have sovereign AI, countries ordering a ton of Nvidia GPUs as well, plus plenty of other companies as well that are smaller than the big tech companies. Now, that said, do I expect Nvidia to show weakness anytime soon? No, I don't think so. I think this is just the expected cycle, right? I think Nvidia expected as well. Plus, I think that Nvidia said that Blackwell is sold out for the whole of 2025. So yeah, I think we still have at least a year or two for sure until we start seeing some slowing down of growth for Nvidia. So sorry, but no, I still expect Nvidia to report pretty good earnings. And yes, even if the stock has reached all-time highs yet again, we're not overbought right now. Could the stock be due for a little pullback? Yeah, maybe. I don't think long-term investors would mind, right? If you can buy more Nvidia shares for a cheaper price, why not, right? But overall, yeah, it's expected. Big tech companies, they also have their own company to look at, right? If they see that the return on investment currently is not as great as expected, then yes, they might spend a little bit less and see how that works out. I think the effects of AI or the monetization of AI is still not happening as expected. That's what I believe. So yeah, overall, that's about it for me in this video. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.